smart-money.trade educational video. Today is January 23rd. I want to go over the um, how do you actually pick the direction, where to enter, what to look for, how do I actually trade. Maybe it will give you some ideas, uh, educational purposes. So you're looking at the daily chart of NASDAQ here. Uh, I want to start at this candle right here on Monday, the January 22, 2024. We have this is the high. We have a high of 17,585, and then the low is somewhere around 17,434. So when you start trading, the first thing you want to see is go on your daily time frame on whatever instrument you are trading. Here is Nasdaq, and let's say this is still a building candle, so we won't talk about that for a second. So when I started trading this morning, I had this high and this low. And the prices when it goes below this, that's when you want to start looking on an uptrend. Of course, we are on uptrend. On an uptrend, that's when it breaks this low. That means it's trying to get the liquidity, and that's when you want to start looking. Where can I enter? Where is the level that I can actually find or enter? Um, and let me turn off the smart-money.trade supply demand so you can see these lines are gone now. Um, so where can I enter here? And if you are our smart-money.trade trading view user, then you can use the our supply demand pro and then find the spot where you can enter. But if you do have a Ninja Trader, uh, then you can actually use that tool. And I'll bring that up real quick to show you how that works. But this is how the liquidity concept works. So you want to get in low here along, and your target should be this high, which it didn't technically actually hit the same day, but there you go. On a two candle, we are there, right? So that's on a daily. So now this is setting my bias to long side. You can go on a 30-minute time frame here and kind of try and see the same thing on over and over that this algo is doing, or um, automated traders are doing it. Um, so basically you can see here on 23rd, um, they grabbed all this liquidity, right, in this one 6:30 morning candle. We protected that low. We never went below that, right? And why I was looking for that, or why you would be looking for that, because based on a higher time frame, like you can analyze this on 1 hour, does the same thing, right? 2 hour, 3 hour, 4 hour, and daily, right? And when do you stop trading? When you see this is a high and this is a low at 6:30, put in high and low, and then we start printing candles in between, as in inside bars or candles, inside, 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 inside. We're not breaking any highs or lows. If you're long, you hold from right here. Otherwise, you just stop trading. There's no point on trading. We are not actually, look at this one. For example, you got a low put in, then that low is protected, never went below this, and we never breach any low or close below it, and we kept going, right? That's when you want to hold and kind of ride the wave. Here there's not much going on. We are targeting this previous day high from today's liquidity grab this morning, from all this range, and then we just take it out, right? Now this, you can find this on pretty much all the liquidity videos and all the famous guys and fancy guys and whatnot. But you will not find is um, you can end up catching a falling knife here, like this low. What if it didn't break? It will go and it will just start dumping. Like, what is your stop? What is your precise entry? Where do you enter? Where do you exit? Right? And that is the only tool that will show you that is our Ninja Trader tool, smart-money.trade Ninja Trader tool. Let me bring that one up now. So you can see uh, these things are calculated on tick base, so they're like printed in seconds and milliseconds as they show up. So these are like very accurate levels, right? So you can see right now at current price, we are fighting with this high, and that's where we already had a previously put in a high level. So you can see here that we got rejected here, and then we kind of came down to grab this liquidity, and then today um, to be created this 5 a.m. or 4 whenever, like midnight London session low, and then we kind of went and grabbed that liquidity as we opened at 635, and we see in 30-minute candle, like we never came down, right? This is where you would enter, and then your stop is right underneath, right? Like you don't need to wait for anything. You already have this level printed. You already have this level printed, right? And that's how you spot. That's how you pick the direction. That's how you go at it, and that's how you can have a very high risk reward and very small stop loss. Like your trade is over here, right? If this level was broken and then this level did not support, your idea of going long is not there until we come back, the price comes back, right? And there's no trade for you then. So don't get wrapped up in trading, buying here and buying here and buying here and selling here and shorting this and that. There's only one trade, guys, and that's really right here, right? There's nothing else. And you can take intraday trades. There's nothing wrong with that on a 30-minute, high lows, and but once you go inside, once the candle goes inside, then really stop trading. Don't lose your capital. That's all I have for you guys today. If you have any questions or you want to get a one-on-one session or buy the smart-money.trade tool, please reach out, visit our website, smart-money.trade, and then we'll give you all the settings if you are trading ES, if you are trading NQ, we'll provide you all the settings and session, and then you can also trade this. I also trade in our group, QQQ options or SPY options based on these levels. When the market is moving, you want to hold it for intraday. You don't want to hold the futures contract intraday overnight. Then I would take the options trade. But that's really what I have for you guys. I hope you liked the video, and if you do, if you have any more questions, please comment or reach out to us, and then we'll help you out. Thank you.